Brisbane properties fall in June. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Still working through my stein of coffee as always, and I thought we'd have a look at this realestate.com.au article because, well frankly, yesterday we looked at another article that was talking about suburbs in Brisbane where properties were getting double-digit growth, and now we have property values slipping in Brisbane. It's just an interesting world we're living in because, I mean, you're getting so many mixed messages. So many mixed messages from the media. Particularly a lot of the more positive spins to property tend to focus on select things. Maybe even a little cherry picking. We'll have to see. Or maybe what this is telling us is that there are going to be some areas that will be more resistant and more resilient in the face of economic turmoil. I mean, we can see here, just look at this chart showing, or diagram showing, unit price growth, how it has certainly not been uniform. A lot of the poorer suburbs are going to be hit worse. And frankly, a lot of the lower socioeconomic areas of our cities are definitely going to be hit worse due to this recession. It's not fair and it's not equal. That's how life is. So Brisbane home values slip in June, but not as much as expected. Brisbane home values have slipped for a second straight month amid the economic impacts of the pandemic, but not as much as expected. So it's fallen, but people expected it to fall more. Melbourne and Perth saw the largest decline in values among the capital cities over June, but recording declines of 1.1%, while Brisbane fell 0.4% to 503,148, according to the latest CoreLogic Home Value Index. So before we go any further, let's just jump over to the Property Council data room, and we can see here I have the median value of residential homes based on CoreLogic's automated value method. Brisbane, the median value is 540,000. This is from March data. So if the values in Brisbane are now down to 503, that's about a 10% change over that period, isn't it? Or a bit less. A significant change. The weighted average is 657,000. On a national basis, home values dropped for the second month in a row, down 0.7% in June, following a 0.4% decline in May. But I don't understand, everyone. Property always goes up. Rent money is dead money. I mean, here we go. It's just like any other thing. We've just experienced... No, that's it. We've got no experience in a recession. Most of the workforce weren't working during the last recession. You've got people who are on Facebook telling you their brilliant schemes to make a fortune. Their brilliant schemes to make a fortune is to sell you training for their brilliant schemes to make a fortune. That's the scheme. That's the less risk. Less work. Buying and flipping, investing in properties, getting tenants, managing, paying the insurance, paying the cost, getting the loans. That's a lot more work than just selling a course on Facebook. So they'll tell you that, borrow so cheap and then just buy a house in Brisbane and then just rent it out for $500 a week. With rents falling. With unemployment at record highs. With us about to hit a recession. With job adverts crashing. It's never that easy. CoreLogic head of research Tim Lawless said the downward pressure on home values had remained mild to date, with capital city dwellings values falling just 1.3% over the past 2 months. So far, the impact from the pandemic on housing markets has been milder than initially anticipated, Mr. Lawless said. Well, it's because the government has stepped in and done everything they can to limit the economic consequences of their lockdowns. And the question is, when these mechanisms are pulled back, when the banks stop being our friends and stop giving people mortgage holidays, what's going to happen to the market then? Are people going to be forced to sell? That's when we'll see it. And remember, it's the last property in your street, the last property in your suburb. That affects the value of your house. So if you're in a suburb where people have good work, good job, stable income, they haven't been affected by this, then your property may not take a bigger hit. If you're in an area where people are going to start being affected, maybe there's a lot of Airbnbs that start jumping on the market, then property may take a hit. That's not the worst thing in the world. Then there's opportunities. You could get another property. You could invest. When times get tough, that's when people can get the bargains. If you're in a house and you plan to live there forever, who cares if you lose 50, 100 grand? If you're just going to sit on it, it doesn't matter. You know, it's oh no, my make-believe money value has taken a hit. If anything, it will probably put a dent on your spending. The wealth effect will decrease, so people may not spend as much. But then again, banks don't have to reevaluate their portfolios as well. He said significant price declines have so far been avoided given the low number of homes hitting the market, combined with low interest rates, government support payments, and mortgage holidays offered by the banks. I mean, did anyone anticipate all of these three things coming together? If we're just property obsessed, everyone. We're property obsessed. Everyone loves their houses, and you know, I mean, it's getting a good crappy old house and doing it up. That's nice. I mean, here you go. You can see someone right here in the picture. They're raising it. They're raising it, and I'm sure they're going to extend on it. And that's what I intend to do. I mean, but they're probably at a much better location than I have, because I guarantee they'd have nice views from there. You'd hope, at least. Anyway, but he warned the long-term outlook for the Australian property market remained uncertain. Commonwealth Bank head of Australian economics, Gareth Arrett, said he was surprised house prices had not fallen more. Given the huge negative shock to the economy caused by the pandemic, it is hardly surprising prices have eased. Well, they're predicting in worst case a 30% fall. So for those of you that have a house, in the comments, what would you do if your house took a 30% hit? Have you already sold to prepare? Or are you just going to ride it out? You're just going to ride it out. You know, if you've got a good another 40 years of life, do you think it'll come back in that time? It may not. It may not. Doesn't matter if it doesn't. Indeed, what has surprised us is that prices have only contracted nationally by around 1% since March. In April, the bank's base case was for a 10% fall in prices due to the pandemic. Yes, but the time frame isn't like in 1 month. The time frame is in 2021 for that. So, is this intentionally presenting the article in a particular way? The upshot is that dwelling prices have not fallen all that much so far, which means that there is no material negative wealth effect to date coming via house prices, he says. Really? Depends. I guess people are worried too. People are worried. I mean, my latest consumer purchase I avoided was a nail gun. Instead, I just bought $20 worth of nails. Don't want to spend the money if I don't have to. This is very important for the outlook for household consumption and consumer sentiment as fall in property prices weigh on overall expenditure. Mr. Arrett said that while property prices were still likely to ease over coming months, it looked more likely that falls would be more modest than first thought. Auction clearance rates have also rebounded to reasonable levels at around 65%. Nationally, he said, again, it's with the auction clearance rates. They love their auction clearance rates. And I will bring up my website here. If we jump over here, you can see on says.heise.com.au, I've got an article about fake auction clearance rates exposed, where thanks to data from Fresh Canvas, where they data mined it. They data mined the auctions that were up for listing, and then a week later and saw, oh, wait a minute, these properties that haven't been reported have come back for sale again. So they didn't sell at the auction. They weren't reported for not having not sold or passed in at the auction. So there's a tendency, you can see here the spread. Advertised 74, worst case is 60%, best case is 79%. So there's a spread. You can get the Excel, you can see the data yourself. I mean, they obsess about auction clearance rates. I guess it's because it's a quantitative figure that they can put forward that can give something people can latch onto. People like numbers. They like saying, oh, this is going good, so they can speak with some authority to base their decisions on. So, and it looks like the impact of significantly lower mortgage rates is largely offsetting the other forces weighing on dwelling prices. We haven't seen the impact of the recession yet. We haven't seen it yet. It hasn't materialized because JobKeeper, that's completely artificial. It shouldn't exist. That didn't exist before. It's government completely propping up every business. And I know the government has a responsibility because they've forced these businesses artificially to lock down. So they've got a duty of care. And you've got the job seeker bonus as well. And you have mortgage holidays. And you have directors not liable for trading while insolvent. All of these things are in the pot right now. If they were all removed, what would happen? That's the question. So we have to wait and see. This is going to be a slow market. Property is slow. The economy moves slow. Data moves slow. We'll just have to wait. Be patient, everyone. Let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. Are you in the market for property in Brisbane? Do you want to get yourself an old Queenslander like this one here? Do it up nice. Or are you waiting to see what will happen? Thanks for watching. If you're a fan of the channel and want to support us, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via using our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy our merch from HeiseSays. You can support us via Gold Pass from the Perth Mint or via using PayPal. Thanks, everyone. I'll see you in the next episode.